It's not been a great year, but it's not been a bad year, considering that what has been thrown at us. Crisis in US regional banks, meltdown in Adani group of stocks. In general, news and bad news has kept us busy, but markets are holding on. What do you make of this price action?
I think it's a singular fact that being an insular economy, we are not linked to the world markets to that extent. The Indian equity inflows continue to be physically strong thanks to the ETF of the PF, the SIPs and mutual fund put together. So I think, we have a one segment of the investment market which continues to invest irrespective of the market signals, valuations, earnings, nothing. It just keeps pouring money into it. And that's a big base. It's not a small base and very unique to India. We don't see that phenomenon in America. We've not seen anywhere in Europe, certainly not in Far East. So therefore, we enjoy one of the things called passive investment into equity, where people are building up portfolios from, because we didn't have very much equity culture in the country. And I think people are just hoping at this point of time that the return that they saw maybe just that 1 year fractional period of COVID is going to come back to them. Now, the fact remains that we are an accumulating nation. Our savings are accumulating, PF is accumulating, insurance premium accumulating. To that extent, we continue to have an underlying strength of local buying. Now, that's notwithstanding, foreigners have sold, continue to sell in the private equity market as well. But, if you keep adding liquidity to the system, what we Indians do, then and keep saving at the rate we are saving, you have a very stable base of buyers in the market. And that's what keeping a market, relatively stable. But that's not comfort to equity investors, because you should have been, your target is to get 14, 15, 17% return year on year. And 2-3 years of bad year means you're off by almost 50%. So it's a challenge, but we keep saving, so we'll keep investing.
Starting point is today, which is 3rd of April 2023. On a 3-year basis, do you think historical returns should be expected 12 to 13 or 14 to 15, depending on which year or which scheme you're looking at?
I think that's reasonable expectations, but I would tend to believe that the returns will come in the latter part of the 3-year period for India, particularly because we have an election year and the government is going to ensure everything to ensure that inflation is not going to go out of control. So when you saw price control on steel, you saw action on sugar. Now you've seen the debt mutual funds indexation benefit going away. So, in a sense, you will see Indian corporate to see profits are going to be capped out for the next 18 months till elections are over. Inflation is a big challenge. Unemployment is a bigger challenge in the country. And therefore, any political party will ensure that these levers or visible levers, which is the price of products, continues to be under control. And that's going to be the capping scenario for Indian equities, because the moment you start to make a little bit of supernormal profits, you've seen government action to come and tap that supernormal profit. So therefore, I think Indian investors should brace themselves that till the elections, you'll have very, very mediocre return. Maybe post-elections and the global market becoming, some buying come from the overseas market, you'll see extraordinary returns perhaps after a very long, steady base. So I would say 15% return on a 3-year basis, reasonably possible, but it'll be back-ended.